All right, traders, welcome. Today, we are diving deep into one of the most powerful concepts in trading right now, order blocks. Seriously, by the end of this, you'll have a complete masterclass on how to spot them, how to know if they're the real deal, and how to use them to build some killer trading strategies. Let's get into it.
But first, just think about this for a second. What if you could literally see the footprints of the big banks and institutions right there on your charts? Well, that's exactly what order blocks are. They're the clues left behind by smart money. And trust me, learning to read them can completely change the way you see the market.
So here's our game plan. We're going to start with what these things actually are. Then we'll get into the 3 golden rules. These are non-negotiable for finding a valid order block. And finally, the best part. I'll walk you through 3 awesome strategies that you can start playing with today. Okay, let's jump right in. What exactly are these footprints we're talking about? What is an order block? In plain English, an order block is just a specific spot on the chart where a ton of money got pushed into the market. We're talking about the big institutions, the banks. Their orders are so huge that they cause these sudden explosive price moves. That zone, right where they place those massive orders, that's your order block.
Now, I know what you might be thinking. Isn't that just support and resistance? And yeah, it's similar, but there are some really key differences. See, order blocks are born from a single massive price move, not from price tapping an area over and over again. That's why we draw them as zones or boxes, not just thin lines. And here's the kicker. They're usually a one-and-done kind of deal, unlike support and resistance, which can get retested multiple times.
Okay, so we know what they are, but, and this is a big but, not every big candle you see is a tradable order block. To find the really high probability ones, you've got to validate them. And we do that using 3 golden rules.
That's right, there are exactly 3 rules, and they are absolutely non-negotiable. If a potential order block doesn't check all 3 of these boxes, you just ignore it. You move on. It's as simple as that.
And here they are. Number 1, the move has to create a price gap, or what some people call an inefficiency. This just means price moves so fast it left a bit of an imbalance. Number 2, the order block has to be unmitigated, which is just a fancy way of saying price hasn't come back to retest it yet. It's a fresh, untouched zone. And number 3, the move away from the order block has to break market structure.
Let's talk about that 3rd rule for a second, because it's super important. A break of structure, or BOS, is when price continues the trend, makes a new higher high in an uptrend. A change of character, or CHOCH, is the opposite. It's that first clue that the trend might be reversing, like when an uptrend suddenly makes a lower low. A valid order block has to cause one of these 2 things to happen.
All right, you've got the theory. Now for the really fun stuff, the strategies. First up is a true classic, and it is so effective. We're talking about using multiple time frames for confirmation.
And the process is just beautifully simple. First, you hunt for a valid order block, one that meets our 3 golden rules on a higher time frame, like the 4-hour or the daily. Second, you just wait. You patiently wait for the price to come back to your zone. Third, and this is the magic, as soon as price taps into that zone, you drop down to a lower time frame to look for a specific entry signal. This confirms the big boys are actually defending that level.
And hey, to make things a little easier, check this out. This is a great little cheat sheet for pairings. If you find your order block on the daily chart, you can drop to the 1-hour for your confirmation. If you're starting on the 4-hour, the 15-minute is your go-to. This gives you a fantastic starting point for your own analysis.
Ready to level up? Our next strategy takes this idea of following smart money and kicks it up a notch. It's a bit more advanced, I'll admit, but it's about understanding how they set traps for other traders. This is what we call the inducement trap. So you have to get this one thing straight because it's absolutely crucial. Smart money needs liquidity to fill their gigantic orders. And where do they get it? Well, a lot of the time they get it from us, from retail traders' stop losses. They will literally engineer price moves to induce traders to jump in only to sweep their stops and get a much better price for themselves. So here's how you trade it. You're looking for an obvious little support or resistance level that's forming near a major valid order block. That little level, that's the trap. That's the inducement. Now, instead of trading the bounce off that level like everyone else, you wait. You wait for price to crash right through it, trigger all those stops, and then you enter at the real order block just on the other side. It's like letting smart money clear the path for you.
So what happens when a perfect-looking order block just fails? Does it just become useless noise on the chart? Do we forget about it? No way. That brings us to our third and final strategy, the breaker block.
A breaker block is quite simply a valid order block that got smashed. Price just went right through it. When this happens, that zone often does a complete 180 and flips its role. What was supposed to be a bullish order block, a floor, now becomes new resistance, a new ceiling, and a bearish one that fails becomes new support.
The setup is actually really clean. First, you spot a valid order block. Then, you watch as price just blows right through it, and this will often create a change of character. Now, all you have to do is wait for price to pull back and retest that same broken zone, but from the other side. That retest is your entry signal to get in on the market's new direction.
So there you have it. That's your new order block playbook. 3 completely different, really powerful strategies. You've got time frame confirmation for those high probability entries, the inducement trap to trade with smart money, and the breaker block to capitalize on levels even after they fail.
Look, we've covered how to find the footprints of big money on the charts. We've shown you how to read them, so the only question left is, are you ready to start following them? Go on, open up your charts, backtest these ideas, and see them for yourself. This could be a huge new tool in your trading arsenal. Thanks for tuning in.